In this video, I'm going to show you how the market is acting today, just like it did before the crash in 2008. Now, this is a chart of the S&P 500 as represented by the SPDRs ETF, SPY. And this is what we were looking at the time. This is a weekly chart. Each one of these candles represents 1 week. Now, the market back in 2007 topped out in October. And then here's important, because this is exactly the way the market is acting right now. You get a high here, and up until this point, you're in an uptrend. You got higher highs and higher lows. Starting in October, you don't see that. You start getting an equal low there. There's a lower high and then a lower low. Boom, that's confirmation you have a downtrend right there on the weekly charts. We get a little bounce here. We retest the lows right there. We get a lower high, a slightly lower low, a little bit higher bounce, and then a drop, a big drop. Look at that. Ouch, that was huge. That is where the real crash was, right there. And this is equivalent to the kind of crash we had in the spring of 2020. Okay, this is where it really got painful fast. It was already hurting, and it got worse. And then after the crash, we were still going down. We had lower lows, lower high, and the bottom right there at the low of the green candle there. Let's blow that up a little bit for you so you can see that. Okay, so that is the big picture. And the key point that I want to show you is that we're trending down, and then we have a cliff. We're going to go off at some point. That's going to happen again sometime within the next year or year and a half, something like that. Okay, let's go to the present now. Hold on. Wait for it. This is what the market looks like right now. We're just in the beginning stages. The market looks exactly like it did in late 2007, which means sometimes within the next 12 months or so, we're going to have a sharp sell-off. All the fundamentals say the same thing. It's all negative, okay? The Federal Reserve is expected to raise interest rates by a quarter basis point every meeting for the next 1 to 2 years. We've got stimulus starting to slow down because of inflation. If they keep doing stimulus, we're going to keep having inflation. They have to pedal down on that, or they're going to get slaughtered politically. Okay, the Democrats are already taking a big hit for inflation. It's going to get worse if they leave it in place. Right now, I don't see aggressive steps to combat inflation. Yes, they raised interest rates a quarter point. Big deal. It's still very, very low. It won't be back to normal rates for at least a year based on the way things are going here. So we're not seeing aggressive tightening in any event. Just removing the stimulus is starting the downtrend. And this is very likely to sell off. So I'm looking for lower prices from here on out. And I'm expecting the overall market to sell off by at least 60 to 65% on the S&P 500 and the Dow Jones Industrial Average. Why do I say that? Because we have more leverage now than we did before 2008, before that crash. Much more leverage. Do you understand? And so it's a reasonable guess to think that we're going to go lower on the sell-off in the bear market than they did in 2008. And that makes sense because we have more leverage. We've got more correction to have to make up for all the stimulus they put in. What goes up way too high must come down even lower to correct for it. That's how this works. Okay, bear markets typically last a year and a half to 3 years. How long have we been in this current bear market? 3 months, 4 months now in April. So not very long. We have a long way to go to the downside. I hope everybody's clear on that. You still have a chance to sell and protect yourself, so please do that. Now, if you want to make money on the downside, if you want to learn how to trade options, if you want to learn how to sell short stocks, if you want to learn how to cover yourself and make money even while the market's going down, even in your retirement account, then you can do that. But there are specific strategies you have to learn first. If you're interested in learning how to protect yourself, then my measly $100 an hour fee is going to save you a whole lot of money if you have significant money in your accounts. I can teach you everything you need to know to start it, at least in 1 to 2 hours. Okay, all you got to do is send me an email and we can talk about this. It's definitely worth it to have a second opinion compared to your financial advisor. And that's what this is. I can teach you options or stock trading strategies in or out of retirement accounts. All right, just shoot me an email, TraderGreggK with 2 G's, K at gmail.com. That's TraderGreggK.com. At gmail.com. So send me an email, set up an appointment, and we'll talk over Zoom. All right, this is Greg Kilpack wishing you that you can avoid the nasty bear market that's on the way.